Traders, what's going on, guys? We just wrecked this nice little deli right next to the condo. Left the Traders Expo. Had a real good time. We're going to roll B-roll here real quick. We just left the crypto event. The crypto event was a real good time. Probably one of the worst events. Wasn't really talking about much, but all good. Tomorrow we got another little series talking about options. All right, options, very interesting part of the market. The boys here, they're ready to go. Eating up a bit. Look, guys, look, we're gonna like concept for you. Let's roll the intro real quick and let's talk about it. Traders, welcome back, guys. Welcome to another Sunday market breakdown. It's your boy Cleveland. Hope you guys are having a great Sunday. Just finished assessing these markets. Ready to spiel out there exactly what I see on my end. That video, that intro there was actually from last week. Me and some of the guys ended up going to a Traders Expo up there in New York. It was a really awesome event. A few thousand traders there. It was pretty sick. Okay, different fund managers from just 50 million of their assets to I think there was a guy there with over $90 billion of the assets were speaking and there to network with. And so it was a really great opportunity to hear about different edges. Okay, hear about different ways people are making money in the markets right now. Wasn't an enormous Forex crowd there. A lot of equity, a lot of options, a lot of futures. But we still had a good time. Met up with a lot of options guys, but did end up meeting some futures guys as well. So when those type of events go on, definitely I'm going to let everyone know about it so maybe we can all meet up and whatnot. Okay, so lots of stuff has gone on since then, right? So we've had Trump talk about the different steel tariffs and aluminum tariffs. That has massive implications. Okay, that's definitely going to cause some kind of trade war with China, and so we're definitely going to see that affecting the markets, even if we already haven't. Okay, and then Euro had a massive buy side move last week. We want to dig a little bit deep into the macroeconomics and see what's going on there. So those two subject matters, we're going to be talking about that tomorrow on the High Impact. So guys, make sure that you are subscribed, and if you enjoy the content, folks, if you like it, well, like the video for your boy. I appreciate it. Okay, so looking at this Euro USD, take a look. We saw a break from the $1.22 mids outside of the structure. So a lot of folks thought that we were going to get our run down to $1.20 flat, but we saw a resurgence of capital come right back in. One, because of the implications of the trade war, and two, Euro had a pretty massive move across most pairs. Here, I'm going to throw up the Euro AUD, Euro GBP, and Euro NZD. We saw an up move, and obviously on the Euro USD, we saw an up move as well. So Euro definitely had a little bit of a bullish move. Okay, again, we're going to be talking about that tomorrow, but technically, all that did for us on that Euro USD is align us right back into that large range, from the $1.22s all the way up into the $1.25s. Okay, so now it just begs the question. We ended up hitting back off at the $1.23 mids, $1.23 teens. Where is this market headed? Okay, where is the market headed? Are we going to run outside of the $1.25s? We're quite some ways away. Okay, and now since markets created that new low and pulled back up inside of the structure, this range now is quite massive. We're now running from the $1.21 mids, and this thing runs all the way down up to the $1.25 mids as well. So this is a 400 pip range. When you're playing inside of a range, you have to adopt a new style, right? So now it's like, okay, do we trade from the lows? Okay, and what do we coin as the lows? For me, about 20% of the actual price action down there in the lows is tradable in terms of a buy side push back up into structure. So basically, if I have a 100 pip range, I need to be looking for an entry within 0 to 20 pips of that range. Anything outside of that really hurts my risk reward. Okay, and so same thing with this Euro USD. If I expect markets to trade back up into those $1.23 highs, $1.24s, I might need a better price. Right now, we are sitting at $1.2319. So markets being at $1.2319, it would be nice to see a little bit of a correction back down in the structure and then maybe a push higher if we get some follow through with this Euro bull move. Again, it's something dealing on the macro side. We'll talk about it tomorrow. Okay. So outside of the Euro, the US dollar actually had a little bit of a rally. All right. So across most pairs, the USD, we did push higher. Here's the dollar index. You can see this dollar traded back up inside of the larger consolidation that it's existed in for a few weeks now. Okay, so now it's all about, are we going to break the low here, or are we going to be able to actually trade back up into structure and hopefully hit off on some more major levels? Pretty interesting. Dollar index back in the 89s. Last week, I think we got as high as the 91 highs, maybe 92. So I'll look over and see. So folks, look, technically, on a technical perspective, what do I want to do? Do I want to go, do I want to buy the dollar? Do I want to sell a dollar? Do I see euro opportunities? I see euro opportunities. Okay, I do see this euro maybe pushing back up inside of the structure. I see a little bit of dollar weakness. I think we might see a little bit of dollar weakness play out throughout the week, just based off of the fundamental implications that are going down, and some of the ones that went down and transpired already last week. We might see some follow through once these markets start to open, once these euro markets, these US dollar markets, we might see a little bit of a dollar sell-off. These have major implications, these different tariffs. I mean, that's a massive cash flow that is exiting, leaving, going out. I mean, there's a lot of cash moving around this entire global economy. We have to really position ourselves to rationalize, okay, where is the money going to go? Once 30%, that's definitely going to keep some of the Chinese investment out of the U.S. But as we know, we already do have a decent amount of Chinese and Japanese investors in the U.S. because every time we see a slide on the S&P 500, we see a bull move over there on the JPY. Okay, so again, I want to break down these markets. Let's dig a little bit deeper and go into the technicals and see exactly where we are. That will help us assess things, you know, a little bit better. And we'll also see if there's anything on our minors and on our exotics. I'll pull up the exotic sheet and we'll see what's going on there. That's probably about 18 pairs. We'll rifle through those and see what's going on. Okay, so folks, if you got any questions, throw them down in the comment section below. And outside of that, I'm excited to see what we get this week. Okay, I'm here for you. If you guys need anything, let me know. Let's pull over into the charts and let's see what we get. Traders, let's pull over into these charts. Starting off here with this Euro USD. Let's head over to that Euro USD. Here we are, Euro USD. Pretty interesting price action at the moment. Was talking with the team. We want to see markets short back down to the 2250s, and then that's where we would love to buy. As simple as that. Markets last week tested these lows down here at these 21 mids. Okay, after that we saw massive buy side pressure out up from that area back up into this the mids of this entire consolidation. Let's see real quick what the mids are. Well, here we are. So yeah, we came right up into the 50% level of this entire move, right? And so whenever you're playing in a range, again, you want to see markets at least on the other side, on one side of the range. You don't want to start buying up at the 50% level because, again, that really just doesn't give you that extreme market scenario that you're looking for, right? I mean, you want to play with extremes. You want to play with probabilities in your favor. You want markets to position themselves to where it's likely that they push on one side. And for us, that's not the 50% level, okay? For us, that would be at least back down here into these price levels. Now, during the overnight session, we did see a massive run back down in the structure. So looking short looks real good. Okay, so love to take this market short back down into these levels. Maybe we get more euro, maybe we get more USD strength than we expected, and then boom, we get a pop down to those structures. Who knows? Maybe we break out. I don't know. All I know is I don't want to be buying right now. Okay, so keeping an eye on that there. All right. Outside of that, Aussie dollar, pretty interesting. Look at the monthly. Okay, Aussie on the monthly, we just came into massive support here. Maybe we start to see a little bit more buyer activity here in this area. And again, any kind of US dollar weakness happening would position this Aussie USD to be in a nice scenario. But again, got to wait it out a bit. This is a monthly time frame, okay? So when it comes to the monthly, you know, timing really isn't on your side when you're looking at these monthly structures. This thing could pop in today, it could pop in the next 2 weeks. To get that precision, you have to pull back down into these weekly time frames, daily time frames, 4-hour time frame. And again, this is if you're assessing on the on a swing trading perspective. Now we do day trade, but when it comes to day trading, that's going to be Jesus calling out those signals, and we really just don't know the structures that the market is going to present itself during those overnight sessions, but he usually spots them pretty well. Here's that weekly again. Okay, if you guys notice, we do have a little bit more downside possibilities, but you just got to get ready for any kind of buyers coming in around this price area. Okay, now when it will pop, you never know. You might want to tag it along and mix it together with some kind of fundamental implication. Maybe that could drive markets back up into these structures here, but it's the beginning of March. That means we have some data that's going to be coming out. Let's keep an eye on it. Okay, now wanted to pull over also and wanted to check out this USD CAD. Check out USD CAD as well, again, on the monthly. Well, you can see it on the weekly. That's a good sign, okay? But on the monthly as well, you guys will notice that we are at the high of this consolidation. Will we see markets hang around a bit? Potentially, okay? Remember, if we get a break higher, that is preluding to US dollar strength, okay? And that would be CAD weakness, okay? So anything matched fundamentally with those two variables there could add or subtract to the likelihood of this market breaking outside of this $1.30 high. Okay, now again, when you're looking at it from a technical perspective, you could assume that we might see markets able to hold around this price area, but it looks like we saw a massive run here on the CAD. I mean, we were looking at, I think, a 700 pip move in February. From the 2250s, we ran all the way to the 2920s. Okay, so yeah, about a 700 pip move, massive buy side move on that USD CAD. Can it sustain? Can CAD sustain a 700 pip move without retracing? Can we rally for another maybe 200, 300 points before we get that pullback? Obviously we can, right? We ran from the $1.37s down to the $1.24s with no pullback, okay? So don't think markets always have to pull back a bit. And I don't really count this too much as a, a decent sized pullback. This is a massive run sell side. And in perspective of this entire move, this is less than a 10% pull back up into structure. You're not going to be able to calculate that too well, again, there's not much profit potential there. There's a rule of thumb when it comes to trend trading. I don't really care about the top 20%. I don't really care about catching the top bottom percent. Give me that 60% in the middle, okay? And so the 60% in the middle for us would have technically have been, if you wanted to catch a pullback, a market relapse, you wanted to be able to basically say, hey, if I can get in anywhere between this area and this area here, okay, of this entire swing higher, you did a pretty good job. Okay, you did a pretty good job. This is your profit potential. Are you going to be able to catch the bottom? Probably not. Are you going to be able to get out at the tippity top? Probably not. But if you can get out 20% at the low, 20% at the high, boom, that's the rule of thumb that we look at. All right, that's some super secret awesome sauce that everyone, again, and on a higher level of trading capital markets looks at, but a lot of retail folks don't really know too much about that rule. Okay, that's something you want to look for. So let's see if we see markets hang at these highs. If we get a little bit of, if we get any kind of economic, maybe we'll get markets to consolidate.